Hi everyone, and welcome back to another weekend market update. My name's Tim Fairweather. Some of you might know me as a team member from the Brooks Trading course. I also host live trading a couple of times a month in the Brooks Price Action Trading Room. But today we're going to look at the weekend market update for the FTSE 100 futures. Start off on the higher time frame. Here is the monthly chart. So you can see we're going up in a bull channel and we've had three clear legs. Now, the bears would like this to be some kind of a wedge, but the problem is that there's just too many bull bars consecutive. They're closing near their highs or they've created gaps. Now, we've had a strong spike up to create a new breakout. We've got two breakout closes above a prior high, and then we've got a pullback and a high one buy. Now, this is an outside bar. If a trader bought one tick above the high of that bar, the next month was disappointing. We then had an inside bar in September, and we just went above the high of that inside bar. So when you've got inside bars, outside bars, it's a tight trading range. It's a form of breakout mode, and the market is deciding on where to go next. Because we're above both moving averages and we've got a lot of consecutive bull bars above the moving average, I think even if we were to pull back, we're still going to go higher. Although it's not a great buy signal above a bear inside bar from last month, if this month closes as a bull bar and closes above the prior buy signal, then it's more likely we're going to go higher. So on to the weekly chart for the FTSE. So we said last week, because we're above both moving averages and the bears have only got bear inside bars, they've got dojis, they're not great sells below. But in a trading range, instead of traders selling below those weak signal bars, they end up becoming buy signals. We said if it goes below that bar, there'll be buyers, and we'll probably go and run the stops on this bear bar here, this big bear bar closing on its low. You can see we've gone back up to touch the high. Bears who are selling there will probably sell above that bar as well. Now, it wasn't a great looking sell in this kind of environment, but if you assume that as traders sold there, they sold more higher, then they need to get back to their break-even point to get out. But now the bulls have got another buy signal. Here was an inside bar, not a great buy above that bar. Here was another bull bar. We didn't go above that, but now the bulls are going to try for a third time to get traders to buy above that high. And I think they'll be successful. Last week was a bad buy signal, and that's because it's a bear doji. So if we go above that bear doji, there's not going to be a lot of buyers waiting to buy there. A lot of traders are waiting for this bar to close to either buy the close or buy above. Now, it is possible that some bulls got trapped back here on the bull spike, but I thought a reasonable place for traders to take profits. There was a few measured moves coming out of breakout mode down here. And so after three legs down to a wedge, traders had a buy signal. It was too high. We didn't go down any lower, and now it's forcing traders to buy high. So what do the bears see? Well, the bears see that even though there's a lot of bull bars, they haven't actually been able to get traders to buy this high for many, many months. And they have been selling above these highs, selling and scaling in higher in order to make money. So I think we're still always in long, even though we're in breakout mode. So it's a buy signal for next week, but you can see that all the traders that are trading in here are buying and buying lower. They're trading with limit orders. So it hasn't been great for stop entry traders. This might be the first stop entry trade that's happened. One issue with that stop entry trade is that it's forcing you to buy high in a trading range. So a lot of traders will buy with a wider stop, maybe down here, and they'll look to add on lower, betting that we're going to go higher. Sorry for my terrible annotations. So always in long and expecting sideways to up next week on the FTSE 100 weekly chart. On the FTSE 100 daily chart, you can see Friday was a bear doji, but it's closing above its midpoint. So a lot of computers will see that as a bull bar. So you have consecutive bull bars closing near their highs and above the moving average, and it's followed by basically another bull bar, a pullback. So technically this is a form of a high one. It went below the low of that prior bar. So if we form a bull bar and a buy signal, then it's a swing buy. Bears got stuck on this bear bar here. They wanted a push down sideways and then another move down, but they didn't get it. Bears who sold this bear bar here got stuck. If you sold there and tried to sell more higher, you never quite got back to your second entry. There is now a gap between the range that we broke out of and this pullback, and that can often lead to a measuring gap higher. Now, I've drawn the measured move off that bear bar because we're in a tight trading range and they're quite reliable measured moves, but it's also going to be setting up different measured moves. There's a higher low down here, and any of these buy signals through here are going to be leading to targets at a new all-time high. As we've been saying for the past few weeks, Bears had a chance to move the market down, but they were not able to get a lower low. Instead, there's been higher lows. And once we went above the high of that bear spike, it's creating measured moves up here. And that's a problem for the bears. Now, of course, it's very, very sideways. And that means traders will be using limit orders. Or if they're trading with stop orders, they'll be trading with additional positions to be able to scale into that trade. So if you're buying there, you're buying lower, betting that we're going to come back to the moving average and you'll be able to make money. But there's two sides to everything. So what do the bears need? Well, they need this to turn into a trap. They need moves like this. They need moves like this. But you can see in the bull moves that led up to it, it wasn't very strong here. This was strong, bad follow through, strong, bad follow through. But this is bull bar follow through, bull bar follow through. This might be the start of something different. Bears see that maybe there's a couple of legs up, pull back one, pause two. But I would be very careful selling above these bear bars. The traders that are selling here are selling because this is the top part of a larger trading range, but that means they'll be scaling in much higher. So always in long for next week. Friday's a pullback. So Monday or Tuesday, they set up a buy signal. It'll be a buy for a test up to the all-time high.
Thanks very much for watching. I hope you found that valuable. If you've got any questions, please put them in the comments below. If you're a member of the Brooks Price Action Trading Room, then I'll see you live during the week. If not, I'll see you next weekend for the next weekend market update. Thanks very much for watching. My name's Tim Fairweather from Zen Trading Tech.